Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In our today's session of JForex Indicators Explained, we are going to consider the indicator named as average price. This is a formation which gets us the average price prevalent over the given time frame. We can look for the prevalent price by averaging out the candle's high, low, and the closing price. We can add these three price inputs and come at a prevailing price, which is the average of these three distributed prices. So let us navigate to the JForex for the newly listed platform from the Dukascopy Bank SA to see how we can take advantage of this particular indicator to look for the profitable trading opportunities. This is the USD JPY chart with each candle period defined at hourly. Let me change it to Euro USD, which is the most commonly traded instrument in the Forex segment. Now, let us add average price. You can even do a quick search. With the quick search, it becomes much more easier for us to add this price. So let's try that. Average price, and here it comes. Now, as I said, the average price is derived using the high, the low, and the closing price of the given candle, and we get these smoothing factors incorporated in this system so that even if there has been a large fluctuation in the given candle period, even though we might see these kind of sharp moves, we will get a stable picture by the average price indicator, and then in the next subsequent moves we can see if the ongoing price, if the current price is higher than the average price or the lower than the average price. So in any given candle period, we can consider this information to see what is happening there if the average price is dropping below the current price is dropping below the average price. That means the sentiment is turning bearish. And if the current price is higher and rising again beyond the average price, that means the current candle period sentiments are bullish. So there is no lag in this information. The data derived using the average price gives us up to date, or you can even say up to the moment data for the given price series, and using that we can decide whether to go for the trend continuity or if to look at the possibility of a reversal in the given circumstances. So this indicator is really helpful in figuring out the changes in the underlying instrument, the instrument of our choice as it unfolds in the market. So for example, if we go back in the day, we have these almost sideways moves where there was very shallow range, very narrow range for the Euro USD. The things were not really going anywhere. And we had these narrow range prevailing for many hours. Then, as the European session began, we saw this downward momentum gaining strength, and here we had some drop of around 20-25 bits in the Euro USD. And if we were to trade We could have gone for short selling trades simply by looking at these current price. If we had the current price below the average price, and for any given candle period, if the price was dropping, then using that mechanism we could have gone for the short sell trade, and somewhere here the momentum changed and we started to see that the current price, if it was showing the signs of rising above the average price, then that opened up the possibility of going for a long trade, and the things remain that way for last many hours, this consolidation phase, and then again the momentum picked up. And as we are approaching closer to the FOMC monetary policy decision, the formation has looked quite strongly in favor of the appreciation of the euro. Even right now, in the current environment, if we consider these price moves so far for the current candle period, here we are looking at the possibility of the current price rising above the average price, and if that starts to unfold, it is going to be an opportunity to buy. We can look at these indicators plotting in multiple ways, so I will try to explain to you some of the representative formations which we can utilize in a simple to use manner. We can look at the average price and what is happening to the average price. If, for example, we see that the average price is dropping, and if the current price is also dropping below the average price for the current candle period, that means the momentum has been bearish for a while, and even in the current candle period, the momentum remains bearish, and it is better for us to go for a new short sell trade, and vice versa applies for the buy trade. If we see that the average price has been rising, if we see the current candle period's price also starting to rise above the average price for the current period, in that case it is better for us to start looking for the buying opportunities and go with the flow, go with the momentum, and go for a buy trade because we have this momentum in our favor. So this kind of possibilities can be looked into, and we can exploit the situation to our advantage. So here all we have to do is compare the average price prevalent over the current candle period to the average price prevalent over prior candle periods, and then compare the current price with the average price for the current period. So in both these scenarios, we get to stay with the momentum as it unfolds and go with the trade only if at the current moment the momentum is showing the signs of continuation. Same way, we can even start looking for trend changes reversal if we specify in a particular time frame, and over that time frame, if we see the curve bending from say upside to the downside or from the downside to the upside. So, for example, if we go back in the day here over this time frame, the momentum changed from bearish to bullish as we saw this curve, the average price, which was dropping, starting to rise. And in this kind of scenarios, if we see the current candle price also showing the signs of rising above the average price, then that means the momentum is quite strong and it is better for us to go with the flow and buy the underlying instrument. So this kind of reversal can also be captured using these average price mechanism. We can even go for continuation. So both kind of possibilities can be exploited. We can target the trend change as well as the continuation of the trend using these indicators. So it makes it easier for us to figure out and spot these changes in the price series in a very prompt manner. As I said earlier, also there is not much lag in case of this indicator, and that is the advantage, that is the beauty of this indicator, and we should try to take advantage of this factor. You can use this indicator in currency segment, in commodity segment, in stock segment. So all kinds of financial instruments are going to work with this indicator if you simply change the instrument, or if you feel like you can even try out the indices and the commodities. Most of the financial instruments available on the platform are going to work quite well with these indicators. So you can take advantage of the situation and go for profit making in this scenario. So here for the gold also we have seen these changes, trend changes, and the continuous drop in gold prices yesterday. But if we look at the average price prevalent in today's session, we had this turnaround somewhere around the $1950 per ounce, and from there on, there has not been any significant drop. Even though if we look at these time frame, we will have to define the time horizon over which we should compare the curve of this kind, the curve of the average price. Only in that scenario, we will be in a position to define these change of the trend in a meaningful manner. So we will have to consider how many candle periods to consider, say for example 5, 10, or 20. You will have to specify, and over that candle periods you will then have to look at the curve and whether the change in the trend is continuing in the current candle, when we have to decide whether to take that trade. So if, for example, if we were to consider 5 candle periods for this curve, then the trend changed somewhere around here. And at this juncture, to consider, we would have needed to consider whether the price was dropping below the average price, or if it has started to show the signs of rising. And using that mechanism, we would have been able to decide. So if the price started to show the signs of reversal, then it is better not to short sell, and if it keeps in the current trajectory and starts to show a strong move below the average price, then that would be the opportunity to short sell. And as is the case with any other indicator, not all the trades generated by this indicator are going to be profitable. We are going to see many loss-making trades also. We will always have to keep in mind that no indicator is perfect, and that same thing applies to this indicator also. So we will have to be mindful and plan our trades accordingly, while keeping in mind the possibility of multiple false signals which can be generated by these average price signals also. So I would suggest that try it out, see how it works out for you, carry out observation over the long period of time, and you will be in a better position to come up with a system, come up with a setup which will help you in optimizing your entry and exit points. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback, and I will be more than happy to take the discussion forward. See you next time around with a equally interesting indicator to work with. Thank you all for joining in. Goodbye.